So, Bill, Vietnam has had its various bumps along the road in terms of its economy and stock market for several years now. Is anything different? Is it better?
Well, I think the government has learned some very hard lessons about macro policy. They've moved to institute a policy of growth with stability. So you've seen how more sensible monetary management by the central bank has whipped inflation from about 30% at its peak to 4% now. That's dovetailed very nicely with exports motoring on the back of all of Vietnam's incredible FDI attraction. So now we have a trade surplus, a modest trade surplus. It'll be about $1 or $2 billion this year, maybe $1 billion next year. And we have booming FX reserves on the back of that, say $40 billion by the end of this year. So the economy is in very nice shape, and that is certainly one thing which has changed over the past few years.
The Vietnam index is up somewhat this year. How can investors prosper from this more healthy economy?
The way to profit from this is that you can go direct and buy stocks on your own through brokers in Vietnam if you want to go through all the palaver of setting up a brokerage account. But I personally think it's much easier to buy country funds where the stocks are all there. They're being managed in most cases for index plus performance, and it's just kind of a no-brainer, easy way of getting quick exposure to Vietnam.
The banks and the property sector are a significant part of the economy there. They are still struggling to get a firm footing. Does that mean that that part of the Vietnam investment component is going to be sluggish?
For a while, I think that's a fair comment. Of course, the fate of the banks and the property companies are intertwined. The property sector has certainly bottomed now. We can see that prices for good projects in good locations from good developers are definitely going up. We've seen prices bottoming in the stock market, various small developers that are listed, and for some of the big names as well. So I think we've certainly seen the worst of that in terms of the property bank nexus. As the property sector continues to bottom and then recover, and as banks get a better handle on their NPLs, which have come down a lot from where they were in terms of the loan books, about 18-19%.
These are non-performing loans.
The NPLs, non-performing loans. Maybe we'll start to see earnings growth in 2015, definitely in 2016. So the banks look interesting as a long-term hold to build positions in now.
Privatization of the state enterprises by some name or another is a big part of the investment opportunity in Vietnam for outside third-party investors. Isn't that right?
Yes, but it's something that's waiting to happen. It is certainly now underway, much more promisingly than when they first tried privatization out in 06, 07, 08. We've had some interesting deals this year. There's more to come in 2015. It's happening slowly but surely, but we're at the beginning of a process now on privatization.
Put Vietnam in the context of an investment for some party considering Asia or Southeast Asia. Is it an investment instead of some alternative, or as a complement to others? How would you pitch Vietnam as that investment?
I would see it as an important way of diversifying your holdings in Southeast Asia. Vietnam's a coming market. It's still only about 35% of GDP, but privatizations, a move to list OTC stocks is definitely going to make it a more important market. And the macro structure is so good now. Earnings growth will start to fire next year. So it's got to be an increasingly important part of diversified Southeast Asian portfolios.
How about Vietnam's relationship economically, at least, with the United States? What is the growth trajectory of that as you see it?
Well, exports to the U.S. Are very important. All that has to happen is for China to be displaced a little bit, and it's tiny for China, but it would be huge for Vietnam, particularly in an area like textiles, where that kind of a trend could see textile exports go up, 40% over a 3 or 4 year period. By 2016, 2017, the U.S. will probably pull ahead of the EU as the #1 trading partner of Vietnam.